evening, everyone, and thank you for joining today's session. We have a lot of interesting topics to cover today. So, before we start today's session on Learn to Invest, let us recap all what we discussed in lesson 1. So, in lesson 1, we discussed about the importance of having an emergency fund, having a medical or health insurance, and the importance of taking a life insurance policy, and the last one, which is an important one for investing, that is having a Demat account. In the second session today, we will cover topics mainly related to the need for financial education. Why is it so important to be financially literate? And what is the difference between saving versus investing? So, both are very confusing terms. So, we will have a clarity about that on today's session. Apart from that, let us also discuss what are the different ways that you can invest your wealth, and when do you term yourself rich. Let us touch on the first topic for today, that is the need for financial education. So, if you see, the overall literacy rate of India is 74%. However, if you consider the financial literacy rate of India, it is just 24%. Sounds ridiculous, right? But that's the hard reality. But you don't have to worry because everything is covered in the course. Coming to the schools and colleges, no one is taught about the financial education, how you have to save your money, invest your money, compound your money. Everyone is only teaching you how to study and how to spend those money that you earn. Consider the real examples of world class celebrities who made millions of dollars in their celebrity careers, like Nicolas Cage and Rihanna. You might all be knowing them very well. But after a few years of earning millions of dollars, they filed for bankruptcy. Why? Because they did not invest any amount of money that they earned during their career, and they just spent it lavishly on luxurious items and unnecessary things. And hence, it is very essential that we save and invest whatever money we earn during our career times. So now let us go to the second topic, that is what is the difference between saving and investing. Savings and investment are often considered as interchangeable terms, but there is a lot of difference. So what is savings? Savings is the amount that you keep aside from what you earn in your savings account. The amount does not fluctuate and is more stable, but it gives you very less returns over long periods of time. Investing is a process where the saved amount is invested in various baskets like gold, real estate, equity, or shares, etc. Generally, the value of the money invested gives you a higher return in the long term. However, the risk is also higher when compared to that of the savings, and the value keeps fluctuating every day. Let us move on now to the next topic for today, that is when do we term ourselves rich? So, if your investing amount actually exceeds the amount that you earn annually, then you can term yourselves rich. It actually takes money to make more money. It's just like a snowball effect. Baskets to invest your savings. So, coming to the various types of investments that you can make from your saving is one, you can deposit in the fixed deposits or the recurring deposits in a bank. Basically, fixed deposit is a lump sum amount of money that you can deposit in your bank and earn interest on that. So this starts from a rate of interest of 3.5% to 7%, and a 0.5% extra you get if you are a senior citizen. Also, the recurring deposit is when you invest a small amount of money, like example 5000 rupees, in a monthly basis. So that is the difference between fixed deposit and a recurring deposit. So coming to the next topic, that is related to real estate. So this, as you're all aware, is investing on a land or a building. So here, till 2012 this provided a very good returns, but however currently the return rate of return has drastically reduced. Also, coming to the liquidity aspect and other litigation aspects, it is very difficult as you need to have good awareness on the documentation, khata, and other related documents before making an investment in this type of basket. Moving on further, we have the provident fund, where if you are an employee of a company, you are entitled to get, as per the government regulations and norms, to open a provident fund. Here, the rate of return is around 8% currently. Also, this is one of the best type of liking of investment by Indians. So this is the metal gold. So in gold there are two kinds, where you can invest on a jewelry or gold bars, or you can also buy digital gold or apply for sovereign bonds. In securities, basically we have the equity, that is purchase of direct stock from the stock market. Also there are something called as the mutual funds and bonds. So bonds are nothing but fixed interest rates that you take debt of the other company or government, and you get interest on that. So mutual funds also in detail I will be covering it in the course later. And equity is nothing but stocks of various companies that are listed in the stock market. Also, this is a new type of investment currently which is happening, which is the crypto market. So in the crypto we have various kinds of cryptocurrency, which is the Bitcoin and Ethereum. But however, there is lot of volatility and also risk involved in this type of investment. So be careful before investing in this basket. The investment summary, that is, if you have a value of 4,200 rupees that you invest since 1990, then what would be the investment amount that would have been realized now after investing in various baskets? So if you look at the deposits, that is the fixed deposit or recurring deposit, you would have made 18,000 rupees. The 4,200 rupees would have grown to 18,000 rupees. And in real estate, if you had invested, it would have grown to 34,000 rupees. However, there are various conditions, because it depends on the locality vicinity of your investment, where you took the land and how the appreciation has taken place. But I have considered all average values for this calculation. And coming to gold, it would have been 23,200 rupees. In the equity, if you had invested, it would have been 42,000 rupees. And I have not considered crypto, as it has been fluctuating a lot, and also you can lose all your money which you have invested. So the best type of investment you can see is equity, that is investing in the market. So investing in equities can give a good yield with lesser risk in the long run. So the longer time you wait, the lesser will be the risk if you are investing in equity. So, if you invest wisely, then what happens is the savings keeps getting compounded, and over a period of time, you may become self sufficient and plan on retiring early. That means no more getting up on those boring Monday mornings and also listening to your boss. So, every day becomes Sunday. So, if the money that you actually save and invest starts compounding and keeps working for you even when you're sleeping. So, to overall summarize today's lesson, we actually first learned the need for financial education and the literacy rate, that is 74%, whereas financial literacy just being 24%. But today, after educating you, it has increased to 25%. The next thing was how world class famous celebrities actually became bankrupt even after earning millions of dollars just because they did not invest. And thirdly, what were the main differences between saving your account or amount, and investing and growing your amount. And lastly, the various baskets where you can invest your money and which is the best one, that is equity or shares. Thank you. Starting from this session, there will be a homework for you. That's right, you heard it right, it's homework. So, the homework for this session is the abbreviation and the meaning of NFT. Please comment below. Hope you all enjoyed today's session. Please stay tuned for the next lesson, that is the third chapter, which is coming next week. Also, do not forget to subscribe to this channel and also share it across your friends and relatives so that we can spread the financial literacy across the globe. Thank you and have a nice day.